On Tuesday the 13th and Wednesday the 14th, we are going to be having CPI data coming out and Fed interest rate hikes. We talk about what has led to the S&P 500 going on its biggest spikes throughout 2022. They have all been from when Jerome Powell speaks or when we have CPI data. CPI data, that is going to be inflation data. We are going to realize, how is inflation doing in the United States? Is inflation rising or is inflation falling? Well, depending on that, that's going to depend on what interest rates are going to be doing on the Wednesday meeting. We need to make sure we are fully prepared for this. When we take a look over on the S&P 500, we could see that we've been falling for the past 11 and a half months. When we want to take a little bit of a bigger step back, we could see that 2022 has been a monster drop. And when we take a look over the past, let's just go with the last 10 years, we could take a look at the monthly chart. We could see that 2022 has been the biggest fading, falling red year since 2008. And why is this? Inflation being up so high and the Federal Reserve having to be able to battle that and saying, okay, let's raise interest rates. Let's raise interest rates. Let's raise interest rates. And we've had to do that so far 6 different times. 4 of those times have been with 0.75 interest rates. Are we about to have a 0.75 interest rate? Well, we are going to find out on Wednesday on the 14th. Now, it is widely expected throughout Wall Street and throughout the United States that we are only going to raise interest rates 0.5%. Jerome Powell has implied that we are only going to be raising interest rates 0.5%. But I think the biggest factor is going to be coming on up the CPI data. Because even though that we've implied that 0.5 interest rates are coming on up, 2 days later after Jerome Powell spoke, what happened? We had a very hot jobs market. And with the jobs market being so hot, this is allowing the feds to actually be leaning a little bit more towards a 0.75 interest rate. As we talked about before in the past, why is that? Well, when we have a very hot jobs market and everyone could go get a job and employment is at a very nice low right now, a lot of the Federal Reserve will say, hey, we have to bring down inflation. Jobs market's looking good. Unemployment is at a low level. This means, again, the economy is still stimulated. People are having jobs and able to afford if we raise interest rates 0.75%. But let's say, again, if we had a bad jobs market, there's a lot of unemployment, not a lot of opportunities out there. Well, then the Federal Reserve may say, hey, it's not fair that we raise interest rates 0.75%. Let's go 0.5%, because this does change our ways of living. And this changes, again, credit cards. This changes loans. This changes mortgages. This changes a whole lot for you as an American. So the thing is, going forward, we definitely want to see what's going to be happening on this big meeting coming up, not only on Tuesday, but only on Wednesday. Let's take a look on what we have here. We talk about some of the biggest drops, the biggest collapses, the biggest moves. August 26th, Jerome Powell spoke at the Jackson Hole in Wyoming. We were able to have last week. Jerome Powell spoke. It was just him speaking, talking about what he sees in the future, and he leaned towards a 0.5 interest rate. We saw the market go from 395 all the way up to 407. We had CPI data leading towards massive drops where we went from 411, fell all the way down to 392. We had CPI data and interest rates being raised, and we've gone from 350, spiked all the way up to 367. Imagine if I told you guys right now that the biggest moves throughout the entire year have happened whenever Jerome Powell spoke and whenever CPI data comes on out. And for the first time throughout 2022, we are going to be having CPI data and Jerome Powell speaking in back-to-back days. Usually we have CPI data a week and a half, 2 weeks later, we have federal interest rates. We have these happening in back-to-back days. That is going to be absolutely crazy. I looked through every date we had CPI data. I looked through every date we had the Federal Reserves. Every time we have a CPI data report, we have had an average of a $9 move on the S&P 500. Every time we've come out with a rate hike, the S&P 500 has had an average move of $13. This does not mean a $13 spike. This could be a $13 spike or drop. CPI data could be a $9 spike or drop. But every time we have come out with this data, we've seen roughly, let's just, find the average between those, about an $11 move. Imagine for the first time in 2022, we have back-to-back data where we could possibly go all the way from 400 to 425. How crazy is that to think about? In the next week, we could go from 400 and spike potentially all the way up towards that line right here. That is a monster move. But imagine if the data is bad. Imagine if we go from 400 and we fall all the way back down to this line here. That is what is going to be happening at the final chance to be able to make your account what you want it to be. Let me repeat that again. In 2022, this is going to be your final chance to turn your account into what you want it to be. For every single trader right now saying, Deck, I'm in the red for 2022. This is your final chance in 2022 to be able to quintuple it, right? I don't know if that's a thing. Every single trader is going to be looking for that final trade. There's 2 ways that we could be able to play this data coming on up in the near future here. Number 1, I want to go for that home run hit. How could you go for the home run hit next week? Well, the next week it's going to be CPI data on Tuesday, interest rates over on Wednesday. CPI data comes out 8:30 a.m. Eastern time. If I wanted to, I could swing overnight. Let's say I believe the market's going to go up. I could do a call position on Monday night, go through the CPI data, see the first CPI data spike, nail again an awesome profit. I could lock in profits there, or I could keep holding until Wednesday. Because if we have low inflation, most likely we are going to have 0.5 interest rates. If we have high inflation and we still have to fight inflation, we're most likely going to have 0.75 interest rates. So your option is either get in on Monday night and take a gamble on which way the CPI data is going to go, or you could wait for the CPI data to come out and you could say, okay, it just came on out. It shows that we have low inflation. I'm going to buy in and now hold it through, let's say Jerome Powell speak, where he's most likely going to have 0.5 interest rates. So if you want to make the most money as possible, you're going to have to take some of the biggest risk. If you want to make money, but not maybe make as much as you could, maybe wait for the CPI data to come out first and then again look to get in. But I think the worst thing you can do on this, honestly, is say, okay, I want to wait for the CPI data to come out, massive rip, massive run. Okay, I want to wait for Jerome Powell to talk about it and then again see a massive rip, massive run. You don't want to be the person that's buying after everyone has already bought. People are going to buy before the CPI data and see if it's going to spike or dump. People are going to hold that. People are going to buy before Jerome Powell speaks to see the spike or the dump, and people are going to hold that. Do not be the last person to buy in after Jerome Powell speaks, after it's already gone on a big time move. Do not be that person. Because when I take a look over on the S&P 500, there were a lot of people that were that. Jerome Powell spoke last week. We went from 395, then it went up to 400, then it went to 403, then it went to 405, then it went all the way up to 407. Did anyone buy in at 409 and just say, like, what am I doing? Why am I waiting so long? Most money is going to come through the moment he's done speaking, or even right before he spoke, if you guys jumped on in at 394. I'm going to be looking to be able to jump in most likely Monday afternoon and be able to hold through CPI data, hold through Jerome Powell speaking, and turn again a $5,000 account into $40,000. It's definitely viable. It's definitely possible. That is the potential of this upcoming move. There's a lot of traders here that are saying to themselves, I need to nail this spike. Hey, Deck, I'm green on the year, but I need to nail this one. Hey, Deck, I'm red on the year. I need to nail this one. This is going to be the next opportunity where you could see that $20, $25 spike on the S&P 500. You could see Apple go on a $15 rip over the next 2 days. That is where we need to be ready and we need to be watching. I know a lot of traders at this moment are going to say, well, Deck, what about this week? What do we need to be focusing on right now? Because, I kind of want to see what's going on at this moment. This whole entire week, it's just traders getting ready for next week. Stocks got off on the wrong foot with the ugly sell-off on Monday as investors waited strong new economic data that stoked worries of the sustained rate hikes from the Federal Reserve. When is the meeting next week? The Fed's policy setting committee is expected to raise its benchmark by 0.5 percentage point. This was almost the same exact morning briefing we got yesterday, as traders are just waiting for next Tuesday and next Wednesday. CPI data coming on out. Depending on what that CPI data says, that's most likely what the rate hikes are going to be. I know it's widely expected that we're supposed to have 0.5 interest rates coming on up. If the inflation is high on Tuesday, guess what? We're probably going to have 0.75. If inflation is low, then we probably will do 0.5. And if you guys are saying to yourself at this moment, Deck, what's going to be the bigger spike? I honestly think the bigger spike is going to happen on Tuesday, because I think most traders are going to put it hand in hand together. If we do have low inflation, everyone's going to be saying, well, that probably means Jerome Powell is going to have a 0.5 interest rate. Everyone's probably going to buy in on Tuesday for anticipation of that 0.5 interest rate. It could be priced in by the time it's Wednesday morning that we already have that type of move. If all of a sudden it's 0.75, or let's say we have very high inflation, people may dump the market, and by the time Jerome Powell speaks, that whole entire dump could already be priced in as people are already jumping the gun slightly. So I do believe that Tuesday next week is going to be hotter than Wednesday, but I do think if we can get just kind of the back-to-back good news or back-to-back bad news, that would be the best case scenario for you to be able to grow your account. There is risk, obviously, and absolutely. There's no, again, surefire shot in any sort of way. But what I'm telling you right now is every single trader must be prepared for Tuesday and Wednesday of next week. I cannot tell you what Jerome Powell is going to speak. I am not him. I am not part of the Federal Reserve. I do not have any idea what they are going to be raising rates up to. I think it all depends on what's going to be coming out on the CPI data, which comes out at 8:30 in the morning. Jerome Powell will come on out at 2:30 in the afternoon on Wednesday, but we will get updated results at 2 o'clock on Wednesday of next week. That's the 13th and the 14th of December. Until then, what do I think is going to happen on the S&P 500? I think every single day from this point on is going to be small move up, small move down. Last week, we had a lot of consolidation, and that was before Jerome Powell started speaking. We had this whole period. This was consolidation consolidation. Maybe we're going up, maybe we're going down. And then finally, guess what happened? Jerome Powell spoke. And we saw this massive green candle. I think we're about to fall into another little trap right here, where it's going to be little green day, little green day, little red day. It's time for the CPI data. Boom, or again, boom. So I do think if you want to trade over these next few days, most of the action, most of the hype, most of the activity going to be in the morning, going to be in the afternoon. I'm not expecting any sort of wild red days. I'm not expecting any sort of wild green days. We know that when these wild red days are going to be coming. We know when these wild green days are going to be coming. Remember, stock trading is about putting all the odds in our favor to be able to understand and be able to know when are we going to have the greatest chance of success. Let's think about it like this, for example. What do you guys think is a tough job, or what would be a tough job? I think a tough job would be a storm chaser. You guys ever see again a Weather Channel where these people are constantly looking and trying to chase down tornadoes? And why is this so tough? Well, it's very dangerous, one, but one of the hardest things they have to do is they have to drive around Kansas. They got to drive around Texas. They got to drive around Oklahoma, and they got to figure out where is this tornado going to land. And what's so tough about that? Well, there's so much space. So what do they try to do? They try to use the radar, try to see where storm cells may form. They try to, again, have the right seasons. They say, okay, well, we know tornadoes are going to happen from this month to this month. I'm not wasting my time, again, during these months, whatever it may be. They're doing their due diligence to have the best chance of running into a tornado. We're doing our due diligence to have the best chance of having success in the stock market. We know the dates where it's going to be hot and crazy. We know what we're looking for where it's going to be hot and crazy. Now we just have to now go after it. Now we have to be set. Now we have to just say, all right, the moment this happens, I have to have the confidence to pull the trigger. I think 99.9% of people here on TradeCaster are going to be ready. I think everyone's going to be set. I think everyone's going to be on top of it. I think everyone's going to be all ready to rock and roll. But the last main factor comes down to, are you going to be willing to pull the trigger? Or are you going to watch the entire spike and not pull the trigger? Are you going to watch the entire dump and not be involved in it? Are you going to be a person that knows, did the research, took the day off, going to be here watching every single move? But you can think about it right now, and I know you're thinking about it in the past, that time that you knew it was all going to happen, and you just sat there and watched the entire move happen without you. You just sat there and said, well, I'll wait for this. I'll wait for a pullback. I'll wait for a drop. And it just kept going and going and going and going and going. That could have been on the spike or the dropping side. Your goal is do not let that happen to you on Tuesday or Wednesday. All right? You guys got this.